all of us as honorable employees of an organization get paid gratuity, right? But as a company, how does a gratuity fund or a gratuity liability work? It's very simple. End of the year, whatever gratuity liability is being booked by a company, it is contributed subsequently to a restricted fund. Now, why a restricted fund? Companies like Wipro, TCS, Mahindra and Mahindra, Infosys, they have a specific fund in which they contribute the money towards gratuity because their objective is very simple. They want to maximize the returns to employees by earning higher interest as far as this trust fund is concerned. But have we ever pondered upon a thought that what is going to be the likely tax implications of this particular contribution what is being done to the fund? Let's understand that. Hi, my name is Ramanujam Narayan and I'm a global gap expert. I have trained and transformed more than 1000 finance professionals across the globe in the areas of Ind AS, IFRS and US GAAP. Now, when we talk about the tax implication of this particular fund, now the process works in a very simple way. Let's understand how does the process work. Now, when it comes to gratuity liability, the simple process is we go to an actuary. We call the actuary. There are renowned actuaries in India like K. Pandit, you have Willis, you have Thanawala, you have Sinal Consulting. You go to one of them. You say, I have to do my gratuity valuation, right? They come back and they say that, this is the gratuity liability what you have and this is something what a company owes to its employees. Now, companies have two mechanisms. One, they can contribute this particular amount to a third party fund which they maintain in order to pay to the employees. This trust and this fund can either be with LIC or you can have with companies like IDFC, SDFC or other banks. Both the options are possible. Now, when they contribute this particular fund to the trust, okay, they get a tax deduction under 43B, provided it's an approved gratuity fund. Income Tax Charity Commissioner has to basically approve the registration of this fund. Once it is registered, once this company contributes towards this fund, it's allowed under 43B. Now, if a company doesn't have a fund or doesn't have a trust, then the deduction gets claimed only based on payment to employees. Such a huge difference. This is where many companies have the mechanism to have their own trust. I want to basically demonstrate a live case study of what are the several implications of this, right? Now, my company got acquired by a larger IT company. That larger IT company did not have a trust and we had a trust. That IT company basically had more than 3 lakh employees and we had hardly 2000 employees. Now, that particular acquirer came and told me that forget it. We don't want any trust. We don't want any fund. Whatever corpus is lying in that particular fund, you straight away take it to our company because it was a merger. Now, I started thinking that if I basically merge the accounts and if I withdraw the entire 35 crores and give it to my parent company, what is going to be my tax implication? Any thought? Let me explain what was the implication. If I withdraw the entire 35 crores from that corpus and give it to my parent company, that 35 crores is something on which I have already claimed a tax deduction. It will come as other income in my books and I have to pay 30% tax on that. I took that proposition to my global finance controller in my parent company and told on a 35 crore income you have to pay 10 crores of tax. Are you willing to do this? My global finance controller came to me, patted my back, told me, Sai, very well done. Ramanujam, very well done. I am very happy with what you have demonstrated. We don't want that money. You keep it with that. You keep it with the host company and I don't want that particular money in my fund. Right? Which means as of today, my parent company's 3 lakh employees are without a trust and my 2000 employees are there with the trust and we did not pay tax. Such practical case studies or practical scenarios comes in your daily life. If you are not familiar with such practical instances, you will end up taking bad decisions for your company. If you are really keen and if you are really interested in understanding more and more content like this, subscribe to my channel called Finance First.